Now back to one of our top stories. The South African Reserve Bank Monetary Policy Committee has decided to leave the repo rate unchanged at 7.5%. Governor Lesetja Kganyago made the announcement just a while ago, saying that inflation remains contained at 3.2%. Let's speak to John Manyike, who's the head of financial education at Old Mutual. A very good afternoon to you and thanks for joining us. Well, we heard that announcement now by the Reserve Bank Governor Lesetja Kganyago, also mentioning that 4 of the MPC members were in favor of keeping it unchanged, while 2 wanted to see another cut. What's your reaction to the announcement, and what do you think the economy's reaction is also going to be?
I think the reality is there are a lot of uncertainties, especially with what's happening globally with the trade tariffs. And I think the Reserve Bank is trying to take a cautious approach to further cuts. But I think a cut of at least 25 basis points would have been very welcome with South Africans who are battling to keep up with their loan repayments.
And speaking of that cautious approach as well, John, do you think that because the effects have not really been felt yet, he did go at length to speak about the global factors, obviously, that they had to consider, but was it too cautious, perhaps?
I still think it might have been a bit too cautious, but if you consider the fact that the Fed in the US also kept the interest rates unchanged, I think you're seeing a similar approach with central banks across the world. They're very cautious and they would rather wait to have a bit of certainty, even though our inflation numbers still remain unchanged. But I think the bank is rather too careful. But I would have expected at least a cut of a 25 basis point.
And speaking of inflation, he went at length to say for now, while domestically inflation is contained, the big for now. What did you make of that?
I think we still need to look at that inflation number very, very cautiously because, I mean, there's a lag with some of these things to actually come into effect. I think when you start looking at Brent crude, if you see oil price starting to tick in the wrong direction, you start being a bit cautious because a lot can change overnight. And I think it's just that cautious approach. But if I was a consumer, of course, I would be disappointed because if you look at it, the cost of living continues to rise. Even people who get salary increases, the net effect is not actually matching, the inflation in real terms for many South Africans.
Yes, and just earlier we had our business reporter, Ntokozo Khumalo, who was out in the field speaking to various business owners. And one of the businesswomen that she spoke to said, look, she does pay attention to these kinds of announcements, of course. But what she's noted is that whenever there's an increase, they certainly feel it as business. But whenever there's a cut, they don't necessarily see the prices dropping. And that also can be spread across the board for consumers going to supermarkets as well.
No, absolutely. When something like this happens, I mean, remember, producers who tend to push their cost to the consumer. So sometimes it does get absorbed somewhere within the value chain. It does take a while in some instances to actually hit the consumer. But also let's remember that there's also a VAT increase of 0.5 coming up. So I think there are a lot of moving parts at this point in time.
And on that VAT increase that's been quite contentious as well, as we've seen, it's expected to put upward pressure on inflation. How do you think this will impact the South African economy, particularly in terms of the consumer spending?
Look, I think it will take a while for us to see the real impact, because the most important thing is how producers are going to react to this. Are they going to be passing more of their own costs? Because there is a cost to produce certain products or services. I mean, if those costs go up, it will certainly, it could push the inflation in the wrong direction. So it's certainly an area that consumers need to watch very carefully. I think it's one of those things that we just have to be more cautious when it comes to credit consumption and being prudent with our personal finances.
Yeah, and one of the factors that the governor mentioned were, of course, global developments, which you touched on as we began this discussion, and saying that whatever happens globally will obviously affect us domestically, especially if you are a smaller player with a growing economy like South Africa and not a developed nation. How much do you think the committee was paying attention to that U.S. federal chair's announcement last night, where we saw them also leaving things unchanged?
Yeah. So if you look at the Fed in the US, they're certainly also concerned about the trade war. It's certainly quite a big issue there. The fact that it may be happening between China, US, and perhaps some of the surrounding countries like Canada. But certainly the US policy has actually shifted quite drastically with Mr. Trump at the helm. So the Fed is actually taking a cautious approach, and we've seen other central banks taking a similar approach of halting interest rate cuts, wait and see. I think we're seeing a lot of wait and see type of posture for now.
And speaking of also the U.S. economy as well, the governor talking about how uncertain things are, but also for this particular announcement, it was quite different. Of course, we have to consider what's going on in the U.S., the global trade wars as well, but also saying that under this announcement, the budget would already have been announced and passed by February, and they would have had a little bit more time as a committee to kind of crunch those numbers. What is the delay in the budget speech? What impact has that had?
Look, the markets don't like uncertainty, and if they have a sense that there could be more trouble in the horizon, it unsettles the market. I mean, you saw what happened over the last couple of weeks with the U.S. markets, falling, because of these trade tariffs. Any shareholder doesn't want uncertainty. They want to save the money, they want to invest, and they want to be a lot more cautious. Nobody wants to lose money. So I guess that we'll see a lot more of that over the next coming weeks.
And John, it wasn't just all doom and gloom. In the beginning of that announcement by the governor, he also mentioned some things that are pretty much green flags, and talking about most major currencies that are strengthening against the US dollar. Does that benefit also the South African rand?
No, absolutely. I mean, if the rand becomes stronger than the dollar, it's actually good for South Africa, especially from exports. Because at least we're getting better value for our money. So it's actually good for that. But also when you see these trade tariffs, of course, other countries will be looking for alternative markets to do business with. So that may also just open doors for us. I mean, if you look at the fact that the gold is starting to tick in the right direction, so there are quite a number of positive things. It's not all doom and gloom.
I mean, of course, South Africa is a sovereign state, but what's been going on in the past couple of weeks, as well as we've been seeing a lot of our internal and domestic policies being challenged in countries that are far from the African shores as well, that also has some sort of an impact. How much of an impact does public perception and sentiment play in these kinds of decisions?
Very, very critical, because the markets are very sensitive to perceptions. And it's unfortunate that there's a lot of misinformation about South Africa and some of its policies. And I think a lot of people are lacking context, especially globally. So it means we have a lot of work to tell our own story as South Africans. So we need to own our narrative, and we cannot just rely on other people to tell our story. And I think this is also quite a challenge for DECO to look at how do we manage and own this narrative to the extent that the markets are comfortable. They have a much better picture of what is actually really happening in South Africa.
Now, in light of both what we've been talking about, both domestic and global factors, do you think that this current policy rate is conducive for fostering economic growth, or will it potentially dampen recovery efforts? We've seen Labour saying it's not going to be good for our economy, and business saying that as well. But is it the right solution?
Look, there's going to be a lot of pressure, across the board. And of course, trade unions will be concerned about unemployment, about retrenchments, because when things like this happen, And when a shareholder starts disinvesting, of course, it doesn't mean it's not a good news for us. But again, as I said, we need to take a stand as South Africa and own a narrative and tell a better story about what's happening in the country.
And just finally, John, in terms of like our day-to-day, for the person who's got a home loan or a car loan at the bank, what does this mean for them?
Look, if the interest rate remains unchanged, it means you're still going to be paying the same installment. I think for those who may be planning to be buying a car in a couple of weeks, you might want to hold on a little bit and just observe and see what happens. Let's be more cautious and prudent in our financial decision making. And I think let's use credit responsibly so that we don't find ourselves in a crisis.
John Manyike, really appreciate your insights this afternoon. Appreciate you speaking to us. That's John Manyike, who's the head of financial education at Old Mutual.